Hello, everybody. This is John Blank, Zacks Chief Equity Strategist and Economist. Today is December the 18th, 2023. And what I'm going to go through today is owning the winners. I want to find, through going through a wide variety of ETFs in the Zacks Consumer Discretionary industries, and I want to show you how you can use them in your portfolio. This is actually a very vibrant area of ETF space, very different than the other ones we've looked at. A lot of single story plays and inverse plays and plays that are around certain themes that are high beta. So need to think this thing through from a lot of perspectives. I guess I would add trading and investing perspectives because a lot of what we're going to look at today is much more short term than otherwise. It has been true that consumer discretionary has been a strong area. Outside of info tech, this is the other area. The consumer has been strong, and these are good names. So I'm going to give you my game plan today. Part one, I'm going to go through the top consumer discretionary ETFs. We're going to have one set of miscellaneous data points on the inception dates and the actual fund benchmarks and the stories behind them, the themes behind them. And this is going to be critical. Always want to come back to this slide, and we're going to do that periodically throughout this entire presentation. We really need to stay on top of what's happening in these thematic ETFs because you're going to see that they're play out in the returns in part two, and they're going to play out in the valuations in part three. So once again, we're going to get through all the data up here. This is going to be your go-to place. You really are going to need these slides to get from Zacks to do this work correctly. The reason is there's just a lot of granularity here. There's a lot of different ideas here, and we have to go through and cross-check and work your way through them all to get them right. So let's get going. First off, let's do our disclosures. This is me, John Blank, and I am not necessarily providing the views of Zacks Investment Research. Past performance is no guarantee of future results. You can read the rest of this at your leisure. So, like I said, let's go through part one. Top consumer discretionary ETF list. This is going to be our go-to this entire discussion. We're going to really need to keep this first and foremost in our minds today. This is the subject area that's going to build the information database and you from this data itself. So keep this in mind. This is actually these first two slides, particularly this next slide, is the most important slide that we're going to look at today. So miscellaneous data points for consumer discretionary ETFs, number one. This is a great reference to what is available in the space. The benchmark index, the expense ratio, and the date of inception are the most important items. So those are over here, benchmark index, expense ratio, and date of inception. The first number is, of course, the annual year. That's all you really need. This is 98. And that is XLY. And that is the State Street beginning of this whole practice of looking in the consumer discretionary space. Look over here, though, at the expense ratios. When you see a one, almost guarantee it's a direction, and that's going to deviate into one of these 3x or 4x shares. So the one way you can carve out, if you're just an investor, not a trader, is look for ETF expense ratios that are no higher than 0.6 or 7. So some of these in the 0.6 space will be these kind of specialized ones, leisure and entertainment. We want the broad ones, of course. Those are just the large cap names. I would not actually recommend that because you can just pick these names off yourself, not even pay the expense ratio. We will go through the top listings of those ETFs, so you can just basically go and cherry pick out anything in these really inexpensive ones and save yourself even more money. So down here, you've got these ideas that are much more granular, as you can see here. China, you've got stuff that listed retail 25, global 1200. There's this India consumer one, Inco, that gets a lot of play. People love this one. The 75 basis point cost, but there's a lot of Inco people out there who like to get into India from that direction. The other thing you're going to point out here is the First Trust AlphaDex fund. This is a StrataQuant Consumer Discretionary Index, and that's a 61 basis points. You're going to find out later this is actually valuation driven. It's not actually growth driven. They're picking the cheaper valuation ones in the space for you. So interesting name versus what we're going to find out in the data. But this is why the data today is so important, because the names aren't going to be helpful, but we need the data to make sure we understand exactly what's going on. And you're going to see things like this: Direction Daily Tesla Bull 1.5 shares. This is a other case here. If people want to buy and trade Tesla on a 1.5 times play, they come into this space and find that ticker name. So again, this is the type of stuff that's in here. It's just kind of a very, very broad space with lots of different things to do and play around with. Gaming is in here. Bear Daily is in here for Tesla. It just the name of you can get the airlines and the cruise ships. You get small cap consumer discretionary. If you go to the next list, you're going to see even more going on here. Franklin Disruptive Commerce. This is a big one. Buys BUYZ. Consumer focused ETF IEDDEI. I mean, again, some of these you can look over here at their benchmark indexes have a very, very broad choice here. Take a look at this one. Micro sectors travel 3 times leverage ETN note for the Bank of Montreal. Very expensive at 0.95, but again, you got an interesting thing to look into. Here is your China one, KBUY, KBUY, of course. That would be your Crane shares. And that's on the China Consumer Index, and that's paying at 69 basis points. So on this second list, you're going to find the more expensive ones. A lot of them are direction dailies. Those are just trading ones. So what I'm going to point out to you, if we go again, we'll come back, like I said, to many times, is this list is your critical list. That's the one that's got the real big stuff and real important stuff. And this one's going to have more names that are actually, again, these are a little bit more new entrants to the space and a little bit smaller. You can see over here, a lot of these are 2021, 2022, 2021, 2016. Generally speaking, there's a lot of stuff that's come apart here in the space for this business. So that's another interesting thing. This is going to get us into the COVID and pre and post-COVID periods for consumer discretionary. A big subject in this area. Keep that in mind. Consumer discretionary really did change. Now, this is just to give an example how interesting this is. This is the change in weekly asset under management just in November and December. This is from November 10th to December 5th, and then again from December 5th to December 15th. So still the last 6 weeks. And over here, we're going to see the same thing as we break it up by industry that is consumer discretionary. If you're buying consumer discretionary, the industries are broad: consumer discretionary, media, automotive, consumer services, retail, leisure, entertainment, and gaming. So again, you've got a lot of different ideas percolating here. And what have people been most interested in? They've been most interested in retail, of course, in this time period. What over here is interesting is when you get into what has been picked up in the last month or so, and it is not always obvious. So, for example, Columbia Threadneedle and Amplify ETFs. Let's go back there. Look for them. Well, here's Columbia Threadneedle. That's the Columbia India consumer one. That's the INCO. And the Amplify ETF is this online retail. So people want to just play the on-time retailers right now, and the India consumers. That is actually what the bid is. So this is what's interesting. We can get down in here. Granite shares. Who knows what that is? We go back in here. We look around for it. I can't find it on this list. I look into this list, and I'm going to find it somewhere in there. Here we go. And then what it is, it's Granite shares 1.25 Tesla daily. So people are trading Tesla with a little leverage with the Granite shares. So again, that is what you can learn here. All we did is we went to this sheet, looked through the assets under management, and noticed actually, it's like I said, the vanguard of the State Street, which would generally be the best and highest level of improvement in terms of assets under management, are not leading the way. There's a lot of trading and interesting thematics that get picked up here. Of course, direction is, there it is, Exhibit A. It's in there as a trading strategy. So keep this in mind. This list is very helpful to find out what people are caring about and then go back into that list, like I said, up here and do it and go through it again. So top 10 holdings. Here is your XLY and XLC. These are the big old ones. Here's your Vanguard one. And of course, Amazon and Meta are big. Alphabet, Tesla. These are all big names. Amazon is actually 25% of some of these things. Like I said, it's not, you can just buy Amazon for that matter. So I wouldn't bother with this. Interesting names to look through: Home Depot, Lowe's, Booking, Starbucks, TJX, Chipotle. Again, all you can do. These are just the quality names. Go buy the stock. It's that easy. I wouldn't bother with this stuff. Down here, it gets a little more interesting. Here you've got some names for that are coming up that I've used. There's Mercado Libre. I played with that in large cap trader a lot. Here's your cruise group, Royal Caribbean. And of course, you got other names down here. And this is looks like this is a China play. So you got a lot of Alibaba, Meituan, JD, BYD, Li Auto, of course, over there. You've got, this is the iShares. It doesn't look a whole lot different than the spiders. So again, just looking through this, obviously Amazon is your main story. Sometimes it could be 10% of the story, sometimes 15, and sometimes even 25. Kind of crazy not just to buy the stock when you look at that. So I think here for the large cap names, this is really an area where you can just figure out what the good stocks are and put together this on your own. And I would do that. All right, so let's go to part 2, which is the consumer discretionary returns. These are interesting to talk about, of course. Returns are always what matter. And what we've got here is the dividend-adjusted price returns for these ETFs. Now, interesting, for example, on here, Nerd. This is a gaming and video gaming. Of course, look at how it turned out during COVID. This is kind of your example. Big spiky driven because everybody was sitting inside and it has not recovered. I point this out. This is what you don't want. You don't want something in post-COVID that's not coming back. You do want something that's trending upward. RTH is a nice one. Let's take a look at RTH. I don't even know what that is. Let's go find it. RTH. I don't see it on this list. RTH. Maybe it is on that list. Let's go back. There it is, VanEck Retail. So that's a U.S. listed retail with 25 names. That's what kind of the thing we're looking at. We got a chance here to figure out a VanEck Retail that's had a nice move, and it is recovering because it's got a nice 25 names. That's a much better exposed index than some of these other ones. The Vanguard one is, obviously another one doing well. I would tell you to be real concerned about the numbers here. These are relative to themselves. So some of the older ones, inception date wise, will have higher numbers because they're just, they accumulated more returns because they've been around longer. So don't get swayed by the pictures here. Get swayed on the trends post-COVID in here. This is critical. You do not want the nerd. The nerd is what you do not want. For example, let's look at a BFIT. BFIT we did not want. What's BFIT? We go back in here, we look around, and we say BFIT is global health and wellness ETFs. Of course, those are no longer as interesting to people. Interesting stock, though. Interesting idea. Maybe you do like it. I don't know. Take a look. So again, BFIT, Nerd, these are some of the interesting names. These are XLY, VCR, of course, Vanguard, and those are your spiders. There's your Fidelity name. Again, do not think 1, 2, 3. This is all relative because Fidelity got in space a little later. Keep that in mind. Very interesting stuff. These are automotive vehicles, cars. That's in the space. So you're going to get your Tesla and some of your electric vehicles. And again, those are actually kind of turning up at this point in time. So again, looking for buying activity that shows you directionally that the price returns are coming up. That's key. Let's go on. All right, return analysis. What I'm going to show you here is this is, the last basically year, a little under a year. That you want your returns. Of course, you want to find one that's got a good returns this year. And then you want to make sure, standard deviation, you're going to know what volatility you're going to deal with. Now, if you want to look back, I would actually look back to this one. This is COVID. I would not bother with this, but over here is pre-COVID. So you can kind of get an idea of what would happen in the environment. So not a lot of data out here, but this is the real data, of course, like we're talking about. You want to focus on this new data, post-COVID data, not the COVID data in here. This is not helpful. Do not use this stuff here, and do use this stuff back here. This is pre-COVID, and that will be helpful. So those are kind of the way I look at this stuff. And I do think it's important to understand these things. So let's get to the valuations, and we'll close this out. Valuations, of course, are critical. And again, where do we see some things that are interesting? Here, of course, look at Nerd is in there. Again, Nerd is very high PE valuations. So those are going to be your names you're going to worry about in terms of people playing. This is that Nvidia consumer one with a 40 PE. Interesting. Again, you're thinking about where people will really put the money to work because they really think the growth is. They're going to put it into the nerds and the incos. Over here, you've got this guy, BYZ. That's electric vehicles. If you go back to BUYZ, again, we're going to go all the way back up to BUYZ. Let's take a look at that. And I'm going to find him, and I think he's on this second sheet. There he is, Franklin Disruptive Commerce ETF. So I was not right about that. That's an interesting one to pick up. So BUYZ is disruptive commerce. So maybe that's what's picking up speed here. Franklin Disruptive Commerce. So again, interesting story here. Now you've got a name for Franklin Advisors in Disruptive Commerce that's looking good right now, and that's interesting. FXD, of course, this is one I talked to you about. This is the Alpha Shares one from iShares or from First Trust. And as you can see, it's actually at a 10 PE, much lower than the average around a 20 PE. So they're actually, what they're doing, they're selecting for value shocks. No different. The Alpha Dex is just about a value stock play. Keep that in mind. You can learn a lot here about what the actual stories are. There's your India consumer, but look at down here. We got, G game. That's in cars. That's going to be your electric vehicles. So coming back a little bit. Now, another interesting way to do this is the price to book. Obviously, one of the things here is do these companies, actually have earnings that they put on their books, and you're buying something that's growing from that perspective. I do think that's a good idea. For example, here we got IEDI. IEDI, let's go take a look at it, is going to be in here somewhere, and we're going to find it and take a look at what its story is. And there it is, iShare US Consumer Focused ETF from BlackRock. Good name, good stock, good thing, and that's becoming clear to us through the price to book. So IEDI. Again, we can do this all day and just keep on picking away at these names and trying to find ourselves stories at work. That's what we need to do. That's why I need these slides. It's critical. Last issue here is fund beta. I mean, some of these ETFs are going to be, of course, market beta is one. But some of these are fund beta. Look at this Fidelity Drive. This is autonomous vehicles. Those are super speculative and really got big beta right now because people are buying those electric vehicle stories. But again, down here, you've got things like Vice. That sounds super, kind of crazy, but it's actually low beta. Again, Vice sounds like it's going to be high beta. Vice is low beta. So again, that's why the data here is so critical. All right, that's it for me. I hope you enjoyed today. These are interesting stuff to do, and these are interesting ways to do them. So I hope you can get us hold of these slides. 866-794-6065 is the phone number. I'm going to repeat that because these slides, like I said, and I think I made my case today, are critical. 866-794-6065. Or send us an email. This is probably the easiest thing to do. Strategy call at zackspro.com. Once again, let's do that. Strategy call at zackspro.com. Also, on the web, you can find us at www.zackspro.com. We're also on LinkedIn and Twitter, but like I said, 866-794-6065 and strategy call at zackspro.com. Thanks a bunch.